All right, hey traders, TG Watkins here. It is May 19th when I'm recording this, which is Thursday. So I think you guys will be seeing this Friday anyway. Anyway, come over here to profitpilot.com. And one thing I wanted to talk to you about over here, we're starting to let people know that I'm going to be doing a market update webinar on the 26th of May, which is next Thursday. So a week from when I am recording this right now. And basically, the thing that you can check it out here, it's going to be 3 p.m. Central. We're going to have some links out there. There'll be a link in this. There's going to be lots of stuff that you guys can find as far as getting to it. So we're going to have that May 26th, Thursday, as I said, 3:15 p.m. It's just going to be a market update, kind of what I'm seeing here, especially now that we have hit a 20% correction. There are some historical norms that have kind of like, quant studies that since the market has hit 20% correction in X amount of time, what that kind of means for the market going forward. Hint, it's not the greatest thing. And so we'll be talking about that and figuring all that out for you. So let's dive into a few things. We can start here with the S&P. Still really having a hard time trying to find its footing in through here. Now, I am still generally thinking that at this point we should see price start to kind of hammer out a bottom. It did make a pretty good attempt at getting over the hourly 50. It didn't hold. Fine, that's fair. And we can see here price is trying to get that double bottom. And really, today was a sideways day into a downtrending 15-minute 50. So we're going to need to give this a little bit more time, but I do think that's going to be, we're going to be working our way to the upside at some point. Now, I don't think it is going to be, I don't think it's going to be very exciting like that. I think that we are eventually going to hit the daily 50, but remember, the daily 50 or any moving average is a moving target, so it's a moving average. And so just because I'm saying at this point we're going to be to the 50, my point is that the 50 is going to keep moving as price also moves, and it will meet somewhere out in the future. So the real question is what does price do? And if price really just kind of chops back and forth for a while, for a long time, the 50 is going to keep coming down here and it will eventually meet it. So that's not to say that when I'm saying target the 50, it doesn't mean that we're going to just jump up right there. It just means that at some point, I think the two of them are going to meet. And the question is what that's going to look like. It's just a quick example. I've been using this from 2008, and you can see here an example of what that looks like, where price basically went sideways until price met the 50, and you can see that the 50 kept moving down until it got there. And this point was no better off than the first bounce that it had. And so we just need to be prepared that that might be something that we're doing. And even over through here, you can see how price got really, really oversold. And it did basically drift sideways to up until it met the 50 as well. So that is also a possibility of what we could be in for. Essentially, this is a bear flag, and this was a bear flag. So yeah, keep that in the back of your mind of what we might be into. Yes, the market might kind of drift up and sideways, but ultimately into some resistance. This market does not feel good. It does not feel healthy and happy, and there doesn't really seem to be much in the way of short covering rallies, and advanced decline volume is not really there. And so yeah, it's pretty tough out there. Now, if we go look at the IWM, a couple things I wanted to show you that if we look from before and we slide this over, because I want to show you a couple scenarios. I'm kind of just the IWM was kind of giving a good view of what this looked like. I kind of think that we're in this area, which is basically right here. So that kind of looks awfully similar on the daily chart, if you could see it. Starting to put in what I call the elf shoe, basically a double bottom. And you can see we kind of got price to finally drift up, and notice it almost got to the daily 50. So different scenario, maybe it kind of takes a little bit longer, but same thing, price coming down to the daily 50 and the daily 50 coming down to price. Now what that looked like on the hourly chart was that the Moxie indicator kept going green the entire time. That was a little bit of the backdrop, it was kind of the backbone of the trend saying, hey, energy and momentum is still actually moving positive, moving in the upward direction every day that this thing goes green, even though you had a pretty big pullback right there. And then what we could see is price got on top of the hourly 50, then the 8 crossed over the 21, and you were able to get a move up here to what turned out to be the hourly 200 and also the third ATR. So if we take all that and we come over here and we look at what we're doing currently, Looking very similar, isn't it? Let me kind of get this straightened out so that we I'd like to get that one down there. All right, so what we can see in through here is we've had that similar pullback, right, that I was just showing previously. And you can see that the Moxie indicator has been moving up the entire time and is now crossing over zero. It's actually now positive, and you can see that also because the Moxie price trigger's fired. So the next thing I'd be looking for, if this is going to be bullish, is we want to see price generally hold the hourly 50. And then the next thing is I want to see the 8 start to cross over the 21. And then what we could do is look for, not the most exciting move, but a move up to the 30 TR, maybe even up to the 200, depending on where the 200 is at the time. So just give it some time. It's not going to be clean. It's not going to be smooth. It will be messy. But I think I would imagine that the short side is at least over for the indices, and we should start to drift back to the upside on that. Now, I'm going to kind of go around and look at a few things since there isn't too much actionable stuff going on in the market right now. It's really pretty dead, and things are all over the place. But if we look at a few examples, here's Apple still, again, as I said, still trying to get off the floor, trying to figure itself out, but it does look awfully oversold. Here's the hourly chart still down here at the third ATR, the daily chart still at the third ATR. I mean, this is pretty oversold. Usually they don't like to keep getting pushed to the downside like that. Today was pretty rough on the 15. It was still trying to put in a double bottom on that time frame, and it has not even touched the 15-minute 50 yet, which leaves it a little bit of room that if it did want to move up to the upside, it could get there relatively quickly because it's not even touching the 50. So that's Apple, not too much going on there, just showing that it's very oversold. Tesla, basically the same story. You could see that, it's still pretty much on the bottom and on the lows, and it's trying to get off there, and it is doing a double bottom on the hourly chart, and the Moxie indicator is still below zero, and we can't even get past the 15-minute 50 yet. So it's stuff that I'm looking at to try and see what's going on and when this is going to be working out, but it just hasn't done anything yet. And if we are able to get up off of the floor, basically, then I think we could easily hit the daily 21, which is something that has happened quite a few times in the past. So that seems like a fairly easy target to begin with. Google, same thing, is still really tough. It's still really heavy. It was out here at 30 ATR. It's kind of backed off that a little bit. It is here close to the 30 ATR on the hourly chart. It's trying to do a double bottom, but it's still underneath the 15-minute 50, and the Moxie indicator is still below zero. So not much to see there. Possibly a trampoline move right here. And remember, a trampoline move is when price is below the 50, but the Moxie indicator is above zero. So usually that is a positive. It's a bullish setup and example, but we're going to have to wait for it to actually confirm. So it's just a possibility right now. So that's that. One other thing as far as trampoline moves go, if we look at HNRG, this is something that another trader and I were talking about. Yeah, we want to stay here. Another trader and I were talking about today, and I thought it was a really good example of how the Moxie indicator works. And so if we slide over here, take this, move over a little bit as well. One question I get quite often is, how do we know if price is going to hold a moving average that price is pulled back into? So typically, I always talk about the 50, and we want to see price pull back into the 50, whether it's daily, hourly, weekly, 5-minute, you name it. And we're trying to figure out if when price gets that moving average, is it going to hold that moving average and move up? If you only trade on one time frame, you can't really answer that question until it's kind of too late. But with how I look at this with multiple time frames and the Moxie indicator, we can ask ourselves that question: is price going to hold the daily 50 in this case? And the way I answer that is you come over here and you look at the next lower time frame. And what you can see is right in through here, and basically the entire trend, what was the situation? Price was underneath a downtrending hourly 50, and the Moxie indicator was below zero. So number one, you had the moving average, the trend, which was helping to push price down and give you that idea of what direction price was generally going, despite the little bumps and spikes. Then the other thing is, what's an inverse trampoline move? An inverse trampoline move is when price is over the 50, but the Moxie indicator is below zero. And so that is it's a false long, or it's a bearish setup. You can actually go short on something like that. And so it was the hourly chart that gave you the answer as to what's going to be happening here on the daily chart as far as price pulling back and coming into that moving average. So that one was really cool. I wanted to make sure I kind of mentioned that to you. Now, as some of the other craziness that's been happening out there, let's talk about Walmart. Let me get actually over here. We can talk about the weekly and daily. Actually, I'll slide over to, let's do weekly, daily, and hourly, because there are a couple things I want to show you on the hourly chart. So again, maybe people are asking like, why did Walmart do what it did, and why did it go down so hard? And I have a couple of answers for that through the lens of Moxie. Number one, here was that same kind of downtrend that I was showing you in HNRG. So what we can see is that price kept following the underside of a downtrending hourly 50 with the Moxie indicator below zero. That told us that price was not going to hold or bounce off of the daily 50, which you can see there. And then we had earnings. So we didn't necessarily know what was going to happen for earnings, but at least according to this setup, everything was bearish. Zero things said that this was likely to go up. And then you could even see here, we had a couple bounces of price over here over the weekly 50, but notice that the Moxie indicator was below zero the entire time. That was another set of inverse trampoline moves on the weekly time frame. So everything was looking bearish on Walmart. Now, between Walmart and then Target, this had a huge effect on most of the retail out there. So really, really big, serious moves on them out there. As I said yesterday, I had to get rid of my Costco. I didn't think Costco was going to necessarily be, well, I didn't know these things were going to implode the way they imploded. I didn't think Costco was going to be part of that. So that was unfortunate. But if we look at this, Target and Walmart doing the exact same thing on the hourly chart, basically just following the hourly 50 down, and the Moxie indicator was still so far below zero, it wasn't even funny. And then we could have been asking ourselves like, well, hey, pull back into the daily 50. Is it going to hold? Well, same thing as I showed you with Walmart and HNRG is, well, what is the hourly chart doing? What's the next lower time frame doing? Zero bullishness. The other thing, just like Walmart with its inverse trampoline move on the weekly chart, look at this. We also had an inverse trampoline move on Target. Price should not be over the 50 if the Moxie indicator is below zero. And that's what we could see here on Target, which helped give some oomph to the downside on that one. So along with that, we can look at some other just retailers that got absolutely pummeled. And most of them are kind of looking the same way. What we can see here is, here's Dollar General also pulling back to the daily 50. Well, do we know if price is going to hold the daily 50? Well, you take it and you come over here and you look at the hourly chart. And look, notice how the hourly chart was in a very, very steady downtrend underneath a downtrending hourly 50. And the point of what I'm trying to show you here with the Moxie indicator and the inverse trampoline moves is so that you don't get faked out by something like this. You'll notice that price is getting up over the hourly 50, but notice that the Moxie indicator is still below zero. That helps you stay out of a bullish trade or thinking it's going to be a bullish trade when really it's not. That was just an inverse trampoline move. And that's what helped propel this to the downside in a significant way. So Dollar General, DLTR, Dollar Tree. I mean, look at these things. They're all pretty much looking the same. Dollar Tree, one of the differences I'm seeing here is it was extended because it was basically outside of the third ATR on the weekly chart. So that's a key sign of being overbought, and you can see then it pulled back from there. Fell right through the daily 50. Well, of course, because the hourly chart was, exactly like Walmart and Target, very much in a downtrend, and the Moxie indicator below zero. So then some of the other things that I've kind of been looking at and talking about DKS, thing to consider is, yes, these things have been choppy, they've been messy, and we've traded them, we've been making some money off of them. And the thing to note is, like, what do we do about them? Well, you could try. We took a short here. We had it here. We added a little bit more, and then we sold it here, and we made a profit. Okay. Now we could have held on longer. Sure, something like this to this. I think it was 30% gain, maybe a little more, and it took over 100 days. So if you don't mind hanging on to some of these things for a long time, there is a trend, and the trend is down. And if you just want to be short something for a very long time, go for it. The only thing we're trying to do as traders is trying to find opportunities to take some off because it's likely that they bounce. Take some off and it's likely to bounce. And maybe you can kind of trade in and around all of this stuff and make profit on a few different trades and maximize your efforts. Otherwise, if you really think these things are going to keep going down, like they sure seem to, you can be long-term holder on the short side and just short it at the right point, and then just ride it down for a while. So that's DKS SIG is another one you can see here, looking very, very similar. And we shorted this one right about here, and we got our 20-something% right about there and decided to move on. This is why, because you can see big move up, then move down, big move up, and then now we have another move down. So while ultimately, yes, there was a really good lucrative trade from here to here, it took well over 100 days, and there was a ton of noise in between right through there. So you have to decide if you want to just hang on to these things for the greater move and the greater purpose, or if you think you can kind of get in here at these ATRs and trade these back and forth. Maybe a little bit challenging, but I know it gives you some action, and people often like to do some short-term trading. So that's SIG. Just showing you some other examples. Here's Foot Locker, more retail just getting destroyed. And so if you got this right, you could have shorted it here, and then you'd be down here. Probably took over 100 days, probably close to 150 days, I'm guessing. But there were some big, big moves in between. Like, look at that. If you were still in that, you would have given up all your profit right back there and had to start over. But that's fine. If you trade just stock, you might not need to worry about this because you don't have to worry about a timeline. You can just say, cool, I'm good with that. And everything like that would be working out just fine for you. If you're trading options, yeah, that's going to be a problem. You'll be dead in the water with that. But yeah, if you're trading stock, you can see if you can kind of feather this and keep finding opportunities to get in and stuff like that. But that's another thing that has just been trending down for quite some time. TPX, want to show you this is Tempur-Pedic, same kind of deal. Now this one barely had any bounces, and you can see that ever since it started, which was with an inverse trampoline move on the hourly chart. In fact, there's another one right here too, inverse trampoline move. This thing just went straight down. So really, really big move to the downside, and it has not stopped. So that could have been a fun time. You just have to be able to be willing to hang on to these things for long enough. And Sleep Number, if we're going to be talking about mattresses, look at this thing. Whew, just all the way down, all the way down. Hasn't done anything to bounce. The only thing I could say here is these were inverse trampoline moves. Anytime price got over the downtrending hourly 50 with the Moxie indicator below zero, inverse trampoline move. So some serious moves out there. And Sleep Number is actually another example of what I've been trying to show people about. When these things go straight up, there's nothing stopping them to go straight down. There are no consolidation areas. There are no stair steps. There's no place that price actually built any levels. So a lot of times straight up, straight down. Make sure you're on the right side of the trade when you see something like this. All right, guys. Well, that's pretty much it. I'm going to be wrapping it up there for you. And remember, I'm going to be doing a market update. Come down here. We're going to be doing a market update real soon on next Thursday, which is going to be the 26th, right in through here at 3 p.m., 3:15 p.m. So come on out, sign up, and we'll have a good time chatting about it. Thanks, guys.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.